And in accounts receivable for the year 2000, it appears that we have $1,941,810 for investments sold. Foreign currency exchange contracts equate to $1,991,213,000. Interest and dividends that it receives from all these investments, $475,596,000. And then member and employer and other receivables at $406,698,000. And so we add total receivables of $4,815,317,000 plus another $338,000 worth of other assets for total CalSTRS assets listed at over $132 billion for the year 2000. But wait, there are some liabilities. They still owe approximately $1,116,000,000 for investments that they've purchased. And on some foreign currency exchange contracts, they still owe $1,976,000,000. They are paying a certain amount of benefits at $69,959,000. Some other liabilities at $195 million, and securities lending collateral at $16,107 million, for total liabilities of $19,464,769,000. Comparatively, net assets held in trust for pension benefits by the state corporation called CalSTRS equals $112,781,688,000. Now just look at the liabilities compared to the assets, a difference of almost $100 billion. Now, of course, you'll say, well, it's in the trust. It's all going to go to the teachers. They need that for their retirement. It's perfectly legitimate. Well, let's just take a look at what actually happens each year in this pension fund. Here it shows that total contributions from its hundreds of thousands of members equal $4,062,503,000. Now this represents the money available outside of what we just saw to pay benefits due to California retired teachers and employees. Now, under the deductions category, we see that actual benefits paid to the CalSTRS employees for retirement are as follows. Retirement, death, and survivor benefits at $3,435,268,000. Refunds of member contributions at $80 million. Purchasing power benefits at $190 million, and administrative expenses at $50,500,000, with total deductions at $3,756,292,000. Now that is what CalSTRS is paying out to its members, who are drawing from the pension fund. Which means that the CalSTRS pension fund made a $12,996,961,000 profit for the year 2000. And for 1999, an $11,596,346,000 profit. Required member and employer contribution rates are set by the teacher's retirement law. Required contribution rates are expressed as a level percentage of entry age normal actuarial cost method. The system also uses the level percentage of payroll method to calculate the amortization of any unfunded liability. A summary of statutory rates and other sources of contributions to the system is as follows. Members are forced by law to pay 8% of applicable member earnings, while employers are forced to pay 8.25% of applicable member earnings. In other words, they match employee contributions plus 0.25%. Now on page 27, under Notes to General Purpose Financial Statements, it states under Foreign Currency Exchange Contracts that the State Teacher Retirement Plan enters into forward foreign currency exchange contracts for hedging purposes to minimize the short-term impact of foreign currency fluctuations on the asset positions of foreign investments. The state teacher's retirement plan could be exposed to risk if the counterparties to the contracts are unable to meet the terms of their contracts. The STRP seeks to minimize risk from counterparties by establishing minimum credit quality standards and maximum credit limits. In other words, the California State Teachers Retirement System is acting as a bank, lending and investing money into other corporate structures, both nationally and internationally. And then under the income taxes section, it states, the State Teacher Retirement Program is organized as a tax-exempt retirement plan under the IRC. The 403B program is organized as a tax-deferred supplemental program under the IRC. The system's management believes that it is operated within the constraints imposed by federal tax law. But when the law becomes lawless and not in the interest of its members or the taxpayers of the union, we have a problem. And on page 29 it states, state statutes and Teachers Retirement Board policies permit the STRP to lend its securities to broker-dealers and other entities for which collateral is received with a simultaneous agreement to return the collateral for the same securities in the future. Once again, the STRP acting as a bank. STRP has contracted with third-party securities lending agents to lend domestic and international equity and debt securities, meaning it's an international corporation. All securities loans can be terminated on demand by either STRP or the borrower. Now, to translate this gobbledygook, let's just consider the members and beneficiaries of the California State Teachers Retirement System as savings account holders. They all hold a savings account together. Now, as in your own personal savings account, the bank, or STRP, is going to give you a measly 1 to 5% return on the money you have in your collective savings account. But the bank, the STRP, is taking that money, investing it elsewhere, putting it at possibly great risk, making a 10, 20, 30% return on that investment, but never adding to the measly 3% that you get on your return for allowing the bank to risk and make a huge profit off of your savings. This has been happening for over 70 years, since before the Comprehensive Annual Financial Reporting System was even put into place. Now here's a look at just the schedule of administrative expenses for the year ended June 30th, 2000. In order to keep all of these funds, numbers, assets, and deductions straight, the California State Teachers Retirement System pays the State Street Bank administrative fees of $255,000. Chart A shows growth in total investments in millions, meaning we add 6 zeros. In 1985, the chart shows $14,208 million in total investments. And as we see, the chart goes continuously up and up and up, until finally we reach the June 2000 total of $112,640 million. And this chart is reminiscent of most pension funds across the country. Now on page 43, Chart B shows CalSTRS returns against the actuarial rate, which is the long-term assumed rate of return. So this is just a pie chart of the growth in CalSTRS returns. But what you must understand is that proudly, these are the returns on investments above and beyond what is required to pay state employees and pensioners. This is a business, a profitable business. This graph shows the actuarial rate, meaning the stated rate of return on the money that the California State school employees need to acquire in order to have their retirement. Anything above this black line is profit. And here we see just how wonderful these guys are at investing other people's money. Over a 5-year period, we can see that the total gains, and notice there are no losses, the total gains equal 14.72% over 5 years. Now again, CalSTRS has essentially become a bank. It states the fixed income unit also manages 3 other programs: the Home Loan Program, the Currency Hedging Program, and the Securities Lending Program. So if you're a state school employee in California, your money is being lended elsewhere. Your neighbor may have bought their home with your money. Under the Home Loan Program, it states that legislation that became effective in 1999 broadened CalSTRS' ability to offer home loans with different interest rates, terms, and conditions. Once again, a sign that the regulators and legislatures work together to ensure that these type of funds can do whatever the heck they want. During the last fiscal year, CalSTRS funded more than $55 million in home loans, bringing the total since organization in 1986 to nearly $3 billion. So apparently, CalSTRS wants to keep expanding its usurious loan program. Under the Currency Hedging Program, it states that CalSTRS currently hedges a portion of its international stock exposure in order to protect these assets against a strengthening US dollar in both Asia and Europe. It also states that this Currency Hedging Program has been successful in adding value as a result of its prudent use of basic hedging principles and the strength of the US dollar overseas. To date, the Currency Hedging Program has generated more than $450 million in additional income to the fund. Simply stated, this means betting on one currency against another. And my guess would be that these and other funds and government corporations probably know in advance which currencies will get higher and lower, because these government-controlled corporations are the world economy. So naturally, in a huge conflict of interest, they know what's going to happen to the market in the future. And under the Securities Lending Program, it states CalSTRS has been lending securities since 1988, and that this represents CalSTRS' first and longest-running off-balance sheet program. Over the last fiscal year, CalSTRS has earned more than $55 million from this activity. Since inception, the program has earned approximately $350 million. Chart D lists U.S. Treasury bonds that it has purchased at an interest rate of 8.88% with a market value of $809 million. So that means that in 2017, when these U.S. Treasury bonds mature, the fund will receive a gain on its investment into the U.S. Treasury bonds of $103.7 million. Other funds, which mature in 2020, 2019, 2018, amount to hundreds of millions in unrealized gains. It's also invested in the Federal Home Loan Mortgage Corporation with a market value of $451.9 million, which just matured last year. It's also invested in the Tennessee Valley Authority, for a market share of $384.4 million. And now we get to perhaps the most important part of this whole presentation. For if you comprehend the following, you will finally understand what corporate governments and government-owned corporations really are. Here on Chart E, CalSTRS lists its largest equity holdings as of June 30th, 2000, and it states that just in General Electric stock alone, it holds 28,948,341 shares of General Electric stock, with a market value of $1,534,262,073. That, my friends, is a major market share of General Electric stock. And once again, We must remember that this is just one of over 185,000 different governments in the United States.